What's up, YouTube? Welcome back to Everybody Eats Trading. My name is Mike, and my goal here is to help traders become successful, or as I like to say, help everybody eat. Each week, I go over stock and chart analysis to help your portfolio grow and hopefully help your knowledge grow as a trader as well. So if that sounds good to you, go ahead and hit that like and subscribe button. It really helps out the channel. And go ahead and hit that share button so we can grow the family and help other people eat. Now before getting into this week's plays, let's go ahead and highlight some of our prior plays and also check out how the portfolio is doing. Okay, so let's go ahead and highlight BNGO first. We can remember at the end of last week I was saying that BNGO already had a nice run and should probably wait for a pullback. Well, it still gapped up on the 16th and it reached a nice little high of 1569. But of course on the 17th, when that correction from the market happened, it also was affected and got pulled back down and closed at 1357. So I did say wait for a better entry position, but considering that it did run off and then had a pullback and kind of consolidated there, kind of bounced off the 10-day moving average, now might not be too bad. Even now looking at the RSI, it's showing that it's underneath the 70, kind of around the 57% area. So looking like a better entry than before when it was here. Now looking at the trend, you can tell BNGO likes to bounce off the 10-day moving average. So it bounced off there, it bounced off there. Even though it dipped below here, it didn't last long, right? It came right back and then bounced off right here and bounced off here again. So I was saying no, but now looking a lot better for possible entry position for BNGO. Next play we can go ahead and highlight will be Grow Generation. We can tell that at the beginning of the week it opened at 58.29 and then it closed at 57.71. So it did try to have a nice little recovery, but of course on the 17th it got hit and stopped, so it had a small pullback. So this is still a good opportunity, a nice buy zone, add to money play here. So I still think that Grow Generation is a nice recovery play to return back to all-time highs at 67.75. Okay, next play is TAT Wellness and Lifestyle. As we can tell on the 16th when the market opened, it gapped up. It opened at 422 and then hit a high of 470 and actually closed at that high. But then the next day when the correction happened, it did have a pullback and then it continued to sell off. Now, I still do think long, this is a great play. We already know that it's going to touch the, $5. It showed that it can get there close. So I think this is also a good add money to play here. If you missed that initial jump here, hey, now you're able to get in. Next play that we called out was ACTC. This is merging with Proterra with the SPAC reverse merger, and not too much happened with this one. It did try to run up on the 16th. It opened up green, hit a little high of 25.90, but then it sold off and closed at 24.95 and slowly sold off during the week, but not by much. So it closed at 24.01. So it's really holding support here in this $24 range real nicely. If you didn't get in, I still think it's a good time to get in. And again, we're going to be holding this until merger, or shortly before merger for the pre-merger run. I want to go ahead and highlight Clean Spark as well. Call this out at the beginning of the month, which it did have a nice run, and then it had a pullback. Now, when it had this pullback, I was actually looking at it on the 16th and the 17th, saying like, man, this thing is undersold. It's going to get ready to go, and I forgot about it. I didn't wake up early enough the next day, and bow, it had a 25% run. Man, that's disheartening. That hurts. Ouch. But that's the beautiful thing about the stock market, guys. There are unlimited plays out there. You don't have to swing at them all. Using a baseball reference, you don't have to worry about striking out. You can just sit there and wait for the perfect pitch to come at you over and over and over again. Wait for that perfect setup over and over and over again, and then you can go ahead and jump in and ride that wave. Will there be risk? Yes, of course, always going to be risk, but you can minimize the risk, you can hedge against the risk, and as a trader, that's what you're trying to do. You just want to minimize your risk. You don't want to buy when something's overbought. You don't want to have FOMO and chase a play that's already running, because in the end, you could get burned. The better you know a company, the better you know a stock, the better setups you'll be able to position yourself with. And lastly, I want to highlight MP Materials. This is obviously the champion of the month. Called this out at the beginning of the month, and it's just been on a nice tear ever since. Even during this correction, it doesn't care, doesn't matter. It's been fighting, they've been tugging back and forth here, but it's still closed higher. So if you jumped in on that MP play, I know you're eating right now, so congratulations to you. Okay, now let's go ahead and take a look at the account. Looking at the account, guys, we're down a little bit. We're still up from the 2,500 that we started with, but obviously, you know, we're not at that 2,800 range. We did hit 3,000 slightly, and then we had a pullback. We were sitting around 2,800, and then with this correction, it kind of pulled us down. But am I worried? Not at all, guys, because when this correction happened, I had money on the side, and now we're positioned for some recovery plays. So as you can see, I went ahead and jumped the gun on some of these recovery plays. There still was a slight pullback on some of them, but overall, not too bad. Now I did sell out of BNGO. Once I saw that the market was having a correction, I did sell out and took profit, and now we're gonna go ahead and invest that into the next play. So right now, as you can see, I already got ASO, which is Academy Sports, FCEL, which is Fuel Cell Energy, PACB, which is PACB, and all of these I'll be going over and highlighting today as why I think they're great opportunities. Now, yes, some of these are already in the red, but I'm not really too worried about it because I see the opportunity in the recovery. Now, I do have my exit plan set if it continues to go the wrong way. So if next week there continues to be a sell-off, then I'm cutting these losses short and I'm getting out quick. And then I'll go ahead and try to find some other opportunities. There's always opportunities somewhere. MP Materials, Clean Spark, both of those still were running even though the market was selling off. So again, you're looking for those good opportunities with good setups. So let's see why I think these are good plays for this week. Okay, so the first company that I want to talk about is Academy Sports and Outdoors, ticker symbol ASO. So as a lot of you know, Academy Sports is a brick and mortar retail store that sells sports goods. So they've been doing pretty well ever since they decided to go public back in October, mainly due to the pandemic causing an increase in people wanting to do outside stuff and also trying to build in-home gyms. So with the increase in demand from people wanting to do in-home gyms, and since people can't go, to bars and clubs, so now they're, actually going outside and experiencing what the world has to offer. They're getting a lot more people doing a lot more hunting and a lot more fishing. Let's go ahead and take a look at the chart and the opportunity. So again, here we are looking at ASO. We'll go ahead and zoom all the way out. And again, ever since it IPO'd, it's been on a nice little up climb all the way up until now. Now ASO should have earnings coming up soon. They didn't specify a date, but it should be around end of February or first week of March. I don't expect it to have a crazy run into earnings because ASO just hasn't moved that way. It's just been slow and steady. But we can see that we're resting right here on the 10-day moving average, which has been shown to be pretty good. Well, besides there, but it tends to hover close to the 10-day moving average. So to me, that's a good sign. Next, we can look at the RSI, and we can see that the RSI, even though it is a little high, it is underneath the 70. Now, third thing that I like about ASO is it doesn't have a lot of fluctuation, right? There's not a lot of volatility with this stock, mainly because there's just not a lot of volume. If we look at the volume the last couple of days, and volume's gonna be in this corner top right here, the volume has been pretty low, right? And overall, besides this area right here of high volume, overall, same back over here, it's pretty slow. Now the reason that it was high volume right here is because this is when they had they did a share offering. So they did a share offering, we got a lot of volume because a lot of people sold off, they wanted to keep their profits, and
And then after that, then you had a lot of people buy in because they're saying, hey, this is just way too low, way too cheap. So you get you get a decent amount of volume as a overreaction play to the sell-off. Then it slightly goes back to its normal volume. So we have earnings coming up, and we know that outdoor activities and indoor gym sales have been really big. So we should expect their numbers to continue to grow from their last earnings. But also, looking into the company, we can see that they have a short float interest. So to find that out, we're gonna go ahead and take a look at Yahoo Finance, and then we'll go ahead and pull up the statistics. So looking at the share statistics, we can see that their shares outstandings are about 89 million with a free float of about 34 million. Now, other things to look at is the percent held by institutions. We can see that this has about a 69, almost 70% shares held by institutions. Now this is good because it mainly means that big banks, big monies, hedge funds mainly are holding on to these shares, and that means less volatility. They're gonna hold on for the long term because they see the value in it. So generally that's a good thing to see, is high institutional investment. But on the flip side of that, we wanna look at the short float percentage. And if we look at the short float percentage, ASO is sitting at 39%. Now anything over 20% is generally a high short. So for Academy to have a 39% short interest, that's pretty high. And considering that the business is doing well and the numbers are doing well, it doesn't really add up. So then you want to look at the short ratio, right? The short ratio basically explains how long these short positions are being held for. The higher basically means the longer that the contract has been open for. If it has like a 1 or a 2, then that basically means the short position is basically about closed. Looking here, the short ratio is at 7, meaning that odds are there's plenty of positions that are still open. So odds are, if they don't, continue to keep their contracts open by paying that premium, then we should see some of those contracts close, which could push the stock price higher. Now, is that guaranteed that they'll close their positions out? No, not necessarily. But my play here is this: if ASO can have a small little run until earnings, which will counter the shorts, then we possibly could get a short squeeze, pushing the ASO stock price even higher. Now, no, this isn't GameStop type squeeze or anything like that, but this is a good opportunity that the shorts might not be prepared for. If earnings come out good, it helps the stock price rise, then now the shorts are really in a position. Okay, let's go back and look at the chart, and let's go ahead and zoom into the 4-hour range so we can try to get a better idea of entry position. So it looks like on the 4-hour, we're bouncing between the 20-day moving average and the 10-day moving average. Now price target wise, I think anywhere below $26 to $24.50 would be a good entry position. And then of course, I'd probably set my stop loss at around $23. I think anything after that, the pattern is broken and you want to go ahead and get out, cut your losses, and look for another play. Now, my price target on this, I'm going very conservative, and I'm only going to say $30. Now, if that short squeeze does come into effect, then this thing can, take off, and I can easily see it hitting $35 to possibly $40. But the initial play that we'll look for is for this to hit $30. If it does hit that, I'll probably go ahead and take some of my position out, take some profit, might leave a few shares just to see what happens after that. But that's the first play, Academy Sports, ASO. Okay team, the next company I want to talk about is JMIA, ticker symbol JMIA. Now JMIA is an e-commerce retailer, and they're basically being considered the Amazon of Africa. Taking a look at their site, they have a really well built up site here, and as you can see, they have it all here. They also have JMIA Pay that deals with financials, JMIA Food, so if you think of Grubhub or something like that, they deliver food as well as JMIA Party and JMIA Now, just other features that they offer. So it's a whole ecosystem that they are setting up in Africa. Now, the play that I'm looking at here is a play on their earnings. Looking at the chart, JMIA has been on a nice run for a while, ever since, back in November. It's been just on a nice, steady climb. So, of course, with the recent correction, it has had a pullback, but This does worry me a little bit because it's not sitting on any kind of support right here. It's just kind of just sitting there. It had a nice little stop, stopped here. Next day, kind of, stayed around the same area, didn't do too much. Now, JMIA reports earnings on Wednesday before opening. Now, why I think that's important is the last 3 earnings, JMIA has consistently beat their earnings statement. So the last 3 statements that came out, JMIA has done better each time, the last one by a very significant amount. If the trend continues, then hopefully that will give JMIA a nice little boost to recover from this pullback. That doesn't necessarily mean that that has to happen. Say they have a bad earnings, and of course that's just going to accelerate the sell-off, and then basically this play is useless. So the big thing to take into account is when their earnings is released. Now their earnings is going to be released Wednesday's pre-market. So I can guarantee pre-market there's going to be a lot of volatility, but then that'll kind of show how the day is going to go. So for my play on this, I would probably wait until earnings. If earnings come out and the stock reacts good to it, then I'll probably try to jump in and catch that wave. And then I'll probably try to look for a price target around the $60 to probably cash out at. And of course, if it has negative earnings, not even worry about taking a position and maybe come back looking at it later once it bottoms out and consolidates. So that's going to be the second play of the week, JMIA, ticker symbol JMIA. Okay, the next company that I want to talk about is Pacific Bio, ticker symbol PACB. So looking at their site, Pacific Bio is a company based in genome sequencing as well as genome variant detection. Looking here, we can see they have a new machine here, the Sequel 2. Scrolling down more, you can see that their sequencing is helping track new variants in the pandemic. So kind of the same thing that Biogenomics had, BNGO. But again, this company already has FDA approval for their machines. Now their genome research helps in human biomedical research, plant and animal science, and microbiology and infectious diseases. And again, they do whole genome sequencing, variant detection, RNA sequencing, and then targeted sequencing. Now PACB Bio also has the Cathie Wood effect. This company has been in the arcade portfolio for a while, and Cathie Wood herself has said the genome industry is going to be the next industry to take off, which if we go ahead and take a look at the chart, she's not wrong. PACB Bio has been running very nicely ever since last August. So stock patterns like these make it very simple to trade. It's easier to make money when the stock is going in a positive direction instead of a negative direction. So again, looking at the chart, we can see that it's had a nice pullback. And when the correction happened, it almost even filled a gap that happened here. And generally that's good to see whenever a gap gets filled, because then now it's just back to steady progress. Another good thing about PACB Bio is that it has a high institutional holding rate, about 94%. So again, this means big money's in this company with solid hands. They're not going to be trading out of it too much, which helps with less volatility, making it an easier company to trade. So right now I would say anywhere between $44 and $41 could be a good buy zone. Short-term price target for PACB Bio, I can easily see it getting back to $53 within a couple of weeks. Long-term, this is just a solid play as well. Again, with plenty of institutional holding and backing, and again, the Cathie Wood effect. So that's my third play of the week, PACB Bio, ticker symbol PACB. All right, everybody, and the last play that I got for us this week is Fuel Cell Energy, ticker symbol FCEL. Taking a look at their website real quick, Fuel Cell Energy, a global leader in delivering clean, efficient, and affordable fuel cell solutions configured for the supply, recovery, and storage of energy. So overall, this is a green energy play, which obviously recently the green sector has been just taking off. So let's go ahead and take a look at the chart. Now looking at the chart, looking on the daily, we can see that Fuel Cell has been on a beautiful run as well. Ever since about November, we can see that every now and a blue moon, it'll kind of dip down and hit this 20-day moving average, almost touched it there. But for the majority of the part, it hovers around the 10-day. But let's look at this right here, right? Where is the opportunity? Well, we've actually broken the 20-day moving average on the daily. And when it broke down here, bulls came in, we got some support right here. And generally, we have a decent little, go ahead and draw a little line for us. Bang. So right about there, we have decent support. We can see that here, it tried to come up, it passed it, but then it fell down, it hit it, came back, hit it again, and then it finally broke through, came back, found support, but then now here we are again, right? Bow, we broke past there, and now it hit it, and then kind of bounced off. Now, is it guaranteed to hold there? No, it's not. But seeing the trend of this stock would lead me to believe that there should be a strong rebound coming. Let's go ahead and take a look at the 4-hour chart. So if we zoom in on the 4-hour, we can definitely see here that, okay, again, we see the nice pattern growth bouncing off of the 10-day moving average. But on the 4, it definitely shows us breaking the 50-day moving average. But look here, right? We hit that line that we were talking about earlier, and then we came back, we tried to pass the 50-day. We kind of got rejected by the 50, and this is actually the second time we got rejected by the 50. So we tried passing it here, got rejected, we bounced down, now we tried passing it again, and now we're just sitting here, right? So now if we're just sitting there, obviously we can go one of two ways, right? Now with the momentum going behind this play, and with the discount that is currently on, I can easily see a lot of investors wanting to jump in and grab a position now. The RSI on the 4-hour is way undersold, so we're way on the bottom here. So we bounced off. Again, look where it bounced off, right there, bang, bang. Corresponds with the trend line that I drew in, hits the 30 and bounces off. So overall, my play here is an overreaction play. Due to the market sell-off, I think this is just a great buying opportunity for this company. They're doing a lot of good things. This company is definitely in the right sector right now, the green energy space. So I easily see this, going back to the all-time highs. So currently, I say anywhere from $21 to about $18 would probably be a good buy zone for this company. And then I would probably look to exit if things went south. Probably if it breaks that 1830 mark. That's probably when I would probably go ahead and get out, knowing that the trend broke a pretty solid support. Well, that's it, guys. That's all I have for this week. Again, if any of this information was helpful, please go ahead and hit that like and subscribe button, and also go ahead and hit that share button so we can help the family grow. Now, again, traders, I always say, make sure we're practicing our risk management. Make sure you're having a good in and out plan. Maybe these in and out numbers are good for me, but maybe you want to be a little bit more cautious, so you might have a tighter stop loss, which is perfectly fine. Whatever works for you is whatever works for you, what you feel comfortable with. For my new investors, if you're looking for a broker to start with, I highly recommend Webull. I'll go ahead and leave a link down below. Also, feel free to comment if there's any questions that you have. If there's a stock that you would like me to break down, please comment below. But alright guys, that's all that I have. As always, have a great week, and let's eat.